crude. For over 2 years, we've been importing Russian crude at big discounts, and this has helped the Indian economy. But now if we stop that and start buying US crude, do you expect this to significantly increase India's import bill? Is this a story that you are tracking very closely? Is this a trend that you're watching out for?
Well, I have been watching it because I think, again, if the loss of access to that inexpensive Russian crude does mean that there's a bit of a risk for recession, inflation rising again in India. Most of the energy that is used in India is imported. All the crude oil is imported into India, and so whether it comes from the U.S. or it comes from someplace else, it's bound to be a higher cost. Now, if India does import oil from the U.S., well, that does have an effect in terms of at least perhaps reducing the trade surplus that India has with the U.S. It might actually be a point in its favor if that becomes a bargaining chip for tariffs. But clearly, this would be one factor that would begin to raise inflation again, be something that the central bank would have to watch very carefully in its own policy as it tries to manage inflation.
Right. Donald Trump spoke about how he's going to demand the Fed to take certain decisions, how the rate cycle around the world should follow what Donald Trump says. So what kind of impact do you think this will have on central bank policies across the world?
To be honest, I don't think it has much of an impact on central bank policy. Central banks around the world, they really have a couple of things that they are watching very carefully. One, of course, is managing their own rate of inflation. And this is an issue in India where inflation has come into the RBI's target range, but it's on the high end of the target range. So it has to be very, very cautious as well. Also, central banks are going to be watching very carefully foreign exchange values, that central banks don't want to have a widening gap between interest rates in the U.S. and interest rates in the domestic economy, because if interest rates in the U.S. are much higher, then that would put some weight on foreign exchange. So really, those are the two issues that central banks will be concerned with, and I don't think they'll be taking clues directly from what President Trump has to say. It's really more the economic indicators that they will be watching.
Right. Now, in terms of supply chains, as a result of U.S. policies towards China, now because they have, China has the highest trade surplus with the United States, and the brunt of tariff actions from Donald Trump will be borne by China. How do you expect that to impact India's supply chains?
Well, we could look at this in one of two ways. One is the fact that India is not right now much of a platform for Chinese manufacturing, as opposed to, say, Vietnam or Mexico. That doesn't put India in the crosshairs in terms of being a target for tariffs. But it does mean that, well, there is actually some potential for India to become a manufacturing platform, for intermediate manufacturing of goods, as Chinese companies look for locations outside of China. You can see it already in Vietnam over the last 3 or 4 years that Chinese companies have invested heavily in Vietnam and other countries in Southeast Asia. And those are countries that could possibly become targets for tariffs, at least tariffs that are targeted particularly at industries where Chinese firms have located manufacturing plants in those countries. So India will have to, in a sense, be very cautious, but it does provide some opportunity for China to become a location for some of the supply chains of goods coming out of China and then thus heading on to the U.S. and European markets.
All right. Thank you very much, Steven Cochrane, for joining us with that view. With that, it's a wrap on this edition of News Center. More news and updates right here.